All right, so Blink, the charging company, BLNK, the ticker. We started rallying. The obvious bottom was 160. We can see that on the daily chart. You see here, you've got sort of a triple bottom. The ADX is really the red line pinching up big, and you've also got some bullish divergence here as the stock RSI is climbing, even though the price is pretty flat at 160. And this is on the daily. So even though we went below 160 a few times in that 2-week block, we always closed above it. So that's obviously the bottom. We saw some divergence here, and then boom, the price. And then here, the blue line on the arrow up down was down. And then when it went up, the price, oh, actually the price already popped up here. But this first piece, that run up down sometimes goes up here. Still coming off of oversold. Comes off of the zero line. And then this here was the second leg. So a lot of times we'll see two legs of a rally, right? One drop down and then the second leg. So it's a nice move, 160 to 250. That's what, 90-cent move? No. Yeah, 90-cent move. 90 divided by 90 into 160 is pretty good. It's at least 60%, right around there, in that range. 50, 55, 65%. It's a solid return, especially in a couple of days. So we saw some divergence. Now what's happening now? Well, the daily chart for Blink does not look super obvious as far as divergence, as far as a lot of this other stuff. Could this move that we're seeing now be keyed off of this original divergence? I would say yes, it's possible. However, because it's the daily chart, I wouldn't count on it. We have to look at some confirmation with the weekly and the monthly charts. But as of right now, the only thing that I quote unquote like, I mean, even though, yeah, this is pinching up, you're looking at higher lows and higher highs. We haven't busted through this higher high yet, which is at 220. Sorry about that, 160 and 220. It was a 60-cent move. It's about a 30% profit, 35% profit in that range. So now we haven't blasted through 220 yet, but it's still, it's still looking promising, and I'm still, long at this general level, 214, 210, 220 in that range. Because I think if the market sells off at 220, that it's going to be, possibly a good time to just get out. Right? Like, look, you've got your, if it hesitates there, as opposed to like if it blasts through there, then it's more probable that the bulls are really in charge, and that so I like when we have to cross over those key levels. Some traders don't like it. Some traders would rather get in above 220, and maybe on a Wednesday or on this using this strategy or this program, I would trade above 220. But for right now, I really would have loved it at 160, obviously. But even now, seeing it now, anywhere between 190 and 210, I mean, that's still a pretty good range, especially for where I think the price is headed. So, obviously everything's playing out well. The RSI is up the way it should be, the bottoms. Same with the MACD, same with the CCI. I mean, everything is sort of doing what it's supposed to do. But there's nothing particularly compelling about this daily chart as far as being predictive of a strong continuous rally. It looks okay, but nothing too phenomenal. The weekly chart is sort of my master chart. This is my favorite chart when we're looking at position trading. I don't like to day trade. I usually like to get in and get out within a couple of days, a couple of weeks, sometimes a couple of months. Sometimes it takes 6 months. I don't know. So it's not always fast. Sometimes it takes a year. Sometimes but usually if a trade's not playing out for months and months and months, then you generally want to pull that position off, especially if you see maybe some bearishness in the indicators and the evidence, if you are bullish, etc. So what I recommend is that you take some shots here and you look at a relatively short time frame, a couple of days, a day, sometimes a couple of weeks. If it lasts more than a few months, usually we'll have pulled that trade off and gotten into something else that's more dynamic and more actionable in our direction. So, and generally we're talking about longs. I'm not really in the short realm, although I'm not averse to it, and my analysis, I believe can be strongly predictive of shorts as well. But right now we're strictly focused on longs. So the ADX right here, we're pinching up on the red line, those little mountain tops. We saw pinches up here. Well, we saw here a pinch up, right? And the price has spiked. Here's a nice pinch up. The price spiked and then came back down. Then here's a little pinch up, and they're actually touching there. And then price popped up. So I really like the ADX. It's my favorite indicator of all time. I've been using it for years. I will not leave home without my ADX. And I like it so much that I use the ADX and the ADX mod, because sometimes one will look better than the other. But yeah, the fact that we've got these double mountain tops, I really like. The higher lows, not bad. It does look like we could see $3. I think that's a strong goal. It's not for sure, obviously, but it's a pretty nice move. 215, that's 85 cents. 85 into 215 is just over 30%. That's not a bad move. So right around 35 to 40%. So we're not going to see divergence here because of the fact that this low is higher than this. So it's not necessarily going to be clear divergence. However, if you look across the board, we're generally seeing what I'd like to refer to as slope divergence. So I wouldn't call it divergence, but I would just call it, sort of slope, a bullish slope. So the fact that the MACD is super strong, even though this price way over here is about $1.50, that low right there, and then this low is about $1.80, $1.90, and then now we're at $2. So the fact that we are higher, is not necessarily divergence. We can't call that divergence, but I would definitely call it a slope pull, maybe slope divergence. But the MACD is much higher than perhaps it should be, especially with the fact that these are very, very close to being on the same horizontal plane. I also like the fact the Arun up down on this weekly chart spent a lot of time. These blue lines spent a lot of time down at the 0 line, as opposed to spending a lot of time up. Again, the Arun up down is probably secondary, maybe even tertiary. It's not it's not like a primary indicator that I use, but I do think it's helpful, especially for exits. So I really, really like it. And just as a general look back and see, okay, well, how long has this blue line been spending on the oversold arena if we're trying to get long? I like that, because it generally it increases the odds, and I think it increases in terms of evidence of that, hey, this could be a jack in the box that's been coiling, that's ready to blast higher. And as well, we've got some, I guess, slope divergence or a slope pull here that's climbing up. But obviously, with the lows being a little higher as we move across these weeks, it's very difficult to say, oh, well, this is divergence. I wouldn't call it divergence, but it still looks fairly promising on the weekly chart. Let's go to the monthly chart. So now this looks a lot more like a flat line, even though it hasn't changed our bottoms, and I wouldn't necessarily call it a triple bottom, although some people might. I try to err on the side of caution. Obviously, there's a lot of different stocks we could get into, so we don't have to pick this one. But I do like the fact that this ADX, this ADX that pinched down here, price collapsed, right? Pinched down here, price collapsed. And all these pinches down, pull. Obviously, the bears were in charge, and in a major way. But now we've got these pulls down. Yeah, that pulled them down here, but we haven't really been pulling them down much, the price down much. We've been sort of bouncing off of this general price point, And on a monthly chart, you can really see that generally the bulls are seeming to strengthen here because although this is not divergence, looking at this ADX, these ADX pulls down, these should definitely pull the price down. We're seeing these lows be a little bit higher. So that's saying, hey, the bulls might be in charge. The bulls might be in charge because these pulls should really pull the price lower if the bears were in charge. So I think we're giving the bulls credit here. Plus, again, not exactly divergence, but we're seeing a slope pull here. So potential, I would call it, I guess, slope divergence, as this is much, much higher, obviously, than this price. This price low is just a teeny bit higher than this price low, which is just a teeny bit higher than this price low. And yet that's, and I also like flat boards. So the RSI being flat, I love. Just flat all the way across. I mean, look at from 2016 to 2020. And I just, I know a lot of this stuff, guys, might seem a little hocus pocus. I have a trader buddy of mine. He day trades, and I haven't shown him all of my stuff. It definitely takes a lot of sort of real focus, and it's sort of unique because most of the time people are looking for momentum, and they're looking, maybe they have some indicator, some scanner. Whereas my stuff is strictly learned in the streets over many, many years. And so the stuff that I might show you might not be super popular on a lot of other trading, websites or YouTube channels, etc. But this has worked really well for me personally. And but he thinks it's kind of hocus pocus. He thinks I'm lucky. He's like, how are you calling out? I mean, again, I'm not going to guarantee oh, I'm going to make you a bunch of money and all these trades are going to win. Of course not all these trades are going to win, but I did hit a couple of trades recently, and he was just like, how are you so lucky? And I'm like, it's not really luck. You feel the conflation of evidence. And one of the things that I love, and I didn't learn this in a book, I literally learned this just looking at charts, is I love these flat boards. So if I can see some of the slope divergence, some of this divergence, but we haven't seen much divergence on this one. This is definitely a unique one. However, we are seeing a teeny bit of divergence if you wanted to go all the way back to 2013. So 2013, we're all the way up here, right? And the price is sort of steadily heading lower, but this indicator, the MACD, is going higher. And now it's forming like this flat board. It doesn't mean we can't go, lower from here, obviously. The flat board on the MACD might not be as attractive as the flat board on the RSI, but I do like this flat RSI for many, many years, five or so years. This MACD is steadily going higher, and this CCI is steadily going higher as well. It's still considered divergence because it started here, right, sort of way over here, way oversold, and now we're at a lower price, and we're not nearly as oversold. So that's definitely divergence if you were to go all the way out here, 5, 6 years. And I also had a trader buddy of mine that I worked with, not to call them out, because they definitely know some stuff. I definitely would never say I have a monopoly on trading analysis or trading insights, but he never liked looking across the screen at divergence. And I'm a huge fan of looking across the screen at divergence because divergence, if it plays out across the screen, then that means two things. Number one is it means you could see a bigger move than you might normally expect or anticipate or hope for than if you were just looking at the shorter term divergence, and also that if the divergence is lasting for a long, long time, that it increases the odds that that spring could be coiling at that jack in the box. And so we could be very, very close to capitulation and close to a nice pop. But as you guys hopefully can tell, I always have to look at a confluence of factors that I believe are bullish, for example, on my bull recommendations across multiple time frames. And I don't like looking at super short time frames because I think that's just a lot of noise. and you know, not that day trading isn't awesome and excellent, and there's no, you know, overnight risk and all that's great, but there is value. And you know, way down the road, I'll put up some day trading videos, and we'll take some day trading setups. But that's a total different ball game. I'll be using MetaTrader 4. I'll be using other tools. I'll use the TDI. I'll use the Murray math lines. I'll use a lot of other stuff. But for this overnight analysis, I don't need Thinkorswim or MT4. I don't need any of that stuff. I actually really like the fact that bar chart is white, and I like the fact that it's just easy to see everything, and you know, everything to me is super clear, as far as, you know, if I can analyze this stuff. So yeah, there is divergence across, you know, six years or so on the CCI, bullish divergence, and there's divergence, slight divergence here. This is slope divergence. And then again, the tricks, solid divergence all the way across from 2013 to 2020. I like this a lot. You know, we've had 1, 2, 3 bottoms, right? 3, so it looks a lot like a triple bottom. Even though it's not exact, it still could be considered a triple bottom, especially when you're looking at the monthly chart. You know, like it still can play off like that. Like prices aren't always exact. You don't always see. It's better when they are, right? It's better when you see, you know, a double top right at the, you know, $3.50 mark, and boom, it's, you know. But sometimes it's not exact, and it's still a good trade. So, all right, guys, here's my analysis. My analysis is that I believe that we can hit $3 in the next, you know, few weeks, few months. That's about an 85-cent move. 85 to, you know, over 214 is about a 30 some odd percent return. That's not bad. If we're really lucky, if we are super lucky, then we could hit even higher. But it would really take a lot of volition for that to happen. But I do think we can see $3. I think this is a phenomenal trade, up to about $3. And if this thing really wants to go bonkers, I think it could hit 4 or 5. But I'm probably going to pull most, if not all, the position off right around $3 if we can hit it. And don't forget to subscribe if you want any of my future recommendations and analysis of future trades. Thank you very much.